So today is not about the details of the BD protocol. It's about what really sets it apart, what's unique about it, what makes it different from the way most consultants or companies have been measuring their impacts on biodiversity. So I'm going to try to highlight a few key aspects. First of all, and that's actually quite tricky to get, we've been talking a lot with especially Europeans over the past 6 months or so about what does this mean to measure impact on the state of biodiversity. For the BD protocol, it's actually quite specific. We're talking about spatially explicit information, things that you can put on a map, a real map, ecosystems that you can see using Google Map, and species that can be actually checked and heard or seen in the landscape. So that spatial explicit side of the equation is critical. Why? Because from our perspective, every time you make a commitment, a target on biodiversity, you need to be able to show it what it means on the ground. That's really, at the end of the day, what matters. But beyond that, it also means a number of other key things that are a bit different from a typical biodiversity footprint assessment. A core feature of it is it's about building an impact inventory, or another word for it, an asset register. It's about the list of ecosystems that you impact within your assessment boundaries. It's about all those specific important species to your business and your stakeholders. It's about keeping track of them, recording them in a standardized way. Then, and that one is, I think, very important, especially for companies that want to disclose, that want to contribute to global targets. It's about really making the distinction between things that directly affect solely only themselves, and the ones that have, let's say, a more indirect link with a change in the state of biodiversity. So typically, it would include greenhouse gases. You can't link the emission of a specific business to a change in the state of the wetland somewhere. It's just the causal link is just way too complex. But still, you're welcome to account for that impact, but it's not the same level of accuracy. And another key point, and that should speak to the consulting community that does impact assessment, that work on offsets, a core building block of a BD protocol is that it builds on the mitigation hierarchy and gains and losses per asset category, per ecosystem, per species. It's not a blanket indicator that covers everything. It's really down to what you see on the ground. So we covered the scientific, ecological, biological component of what it makes BD protocol unique. It's, as I said, it uses common ways of looking at impact assessment on site typically. But beyond that, what we did as well is we tried to talk to the business world, and I guess in a bit of a sneaky way. We're not talking about dollars or euros or rand here. We're talking about using the power of financial accounting and what it shows and how it records change, but in a biodiversity context. And what does this mean in practice? It means that we are using double entry bookkeeping applied to biodiversity. So you got asset account, you got losses, gains accounts, and you got other accounts. And what this accounting process enables you to do is quite simple. It tells you two main stories. What has happened during the past year, all the gains and losses broken down per ecosystem, for instance. That's in your statement of biodiversity performance, which is equivalent to your statement of financial performance, where you look at your profit, which is your revenues minus your expenses. And it tells you the entire story of a business since its inception. And that is very important. It's a statement of position, a biodiversity position, and it leaves the total footprint of the business and the positive component of that footprint and the negative one. Why it's so important? Because typical impact assessment processes are ad hoc. They cover one event at one point in time, and then you forget about it. Many biodiversity footprint exercises only look at negative impact. They don't look at the position, they only look at the performance for a specific time frame. So what we're trying to say is that the BD protocol is a way to consolidate information in a very precise and rigorous manner so that the company can track change over time. And that's critical for target setting. Another key aspect, which is very different, is that we're not replacing any way of measuring impact on ecosystem. We are using many different condition rating tools out there. I'm going to mention a couple for South Africans in the room. So anybody who's working with wetlands, we're using typically Wet Earth in South Africa, just as an example. So we're not replacing anything. We're just putting the information in an accounting format. And the reason for that is that we want to push for first internal validation within the company, and in the end of the day, external verification, so that you can actually trust the information. And it's all has to do with trustworthy disclosure reporting at the end of the day. That's my last slide. And I want to expand a little bit about the interpretation of the information that can be produced through the BD protocol. What makes it even more unique? One of the key messages, and I'm trying to be as clear as possible on that one, the entire purpose is to build trust. Allow me to explain. I think in the biodiversity and business space, there's been a lot of misunderstanding from many stakeholders, many parties over the years. For instance, the concept of conservation and mining being odd bedfellows is very well known in South Africa, for instance. And the idea is that through proper accounting processes, standardized way of measuring impact, consolidating impact, putting target together, you can build trust with your stakeholders because everybody can understand the same baselines, can understand how the information is built together. And I think that can be a game changer really in the space so that you can really work together with different stakeholders. But beyond that, and for that being able to work, there's a second step. We call that interoperability. Maybe it's a bit technical, but what it means is that any information that is applicable or real on the ground on your site is captured and can be consolidated at the group level. It speaks to each other. So when you make a target, it filters down to the asset level. And that's really a game changer again in the biodiversity space because it has always been a challenge to have group level KPIs. And on the topic of target setting, I just want to highlight, and people, when they talk about no net loss, net positive, they're typically stuck in a mindset of a specific period, how much gain we can have or how much offset should we do. That's fine. That makes perfect sense. But there's another picture that you need to also to consider. It's what target should you set yourself for your global total footprint, which is made of your positive and negative footprint. Do you want it to be 30% positive, 70% negative? That's a question we are trying to ask companies as well, because it's not only about the annual change, it's about the global picture as well. And finally, I just want to conclude on the quite mixed and unique bag of valuation approaches that the BD protocol pushes. It takes a very specific angles. And first of all, it's about recognizing the intrinsic value of ecosystems and species. That's the primary output of that accounting process. Biodiversity is important by itself. It helps us, we've all talked about this up to now, but the primary process of putting together biodiversity footprint information is to recognize in that footprint what are all the elements of biodiversity that it actually is made of. And that makes the intrinsic value of ecosystem and species critical. But beyond that, we also recognize that some species have got additional values for different stakeholders, for the business, for communities, for NGO, and these should be also looked at and separately, however, because of their nature. And last but not least, I want to focus as well on the fact that we are pushing for companies to do the work of linking the state of biodiversity, the gains and losses that they are seeing through their mitigation activities to actual costs and liabilities, to actually make the link with financial accounting. And that's going to be based on case studies and through our different partners. We're going to have a nice, very clear business case of why the biodiversity footprint of a company is linked to the financial materiality of a company. That's the only way to do so. And finally is when companies are trying to showcase their contribution to society, it's also very much important to understand that broader society. What are the cost savings that the private sector is actually generating for the broader society? I'm going to stop there, but that's really what makes the BD protocol unique. Thank you.